definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right.
So if you're watching this video, it's for one of two reasons. The first is that you are a Mortgage 360 client and you received a link to it via email, and you also received an email with the transcription of this video so that you could read it if you so chose. The other reason you might be watching this is because we did cross-post it with my YouTube channel so that consumers out there can see how we're advising our clients to make a lock-in decision with respect to their variable interest rate mortgages. Now, the reason this video is coming out today and the reason why you're receiving it today is because obviously tomorrow, March 2nd, is when the Bank of Canada will likely announce some sort of rate increase. My guess is it will be about 1/4 point. And we want to make sure you have the information that you need in order to start thinking about whether you want to lock in or not want to lock in. Most of you are probably going to choose not to want to lock in, but there is a lot of confusion around this. We've been getting a lot of questions, so we want to get this information out there so that you can better understand it. So let's start first and foremost by talking about the lock-in process, and then we'll talk about whether it makes sense to lock in right now. So starting with the lock-in process, two ways you can do this. If you're a Mortgage 360 client, you call us and we will go through and see what the lock-in rates would be for you. And we'll also search other lenders to see if there's better options out there if you do decide to lock in. That way we can make sure that we save you the most amount of money. You trusted us to do that in the beginning, and we want to make sure that we are following through on that, and we will follow through on that to make sure that you get the absolute best advice and the best mortgage possible as you did when you initially got your mortgage with us. Now, the second thing you can do, and for those of you who are not Mortgage 360 clients, I apologize. Unfortunately, legally and ethically, I can't advise any of you because you're not Mortgage 360 clients. I can't provide individual advice to you. So you have to go back to either your lender, your broker, or your bank. And when you go to lock in, you're going to be given options. The options are going to be existing fixed rate products with your existing lender. In other words, if you are locking in your variable rate, you have to lock into a fixed rate term that is available currently at that lender. So in other words, let's say you have a variable rate mortgage and you've got 3 years left. You have to lock into a term that is at least the same or longer than the amount of time that you have left. So you would have to lock into a 3-year or longer interest rate, or a 3-year or longer fixed rate mortgage. Now, let's get into the details of whether or not it makes sense to do that. As of right now, most clients who have variable rate mortgages are at 1.5% or less. If you were to lock in today, you would probably have to lock in at somewhere around the 3% mark. So what that means is that there is a 1.5% difference between the rate you're paying right now and the rate you would be locking into. Now, many economists are predicting that we'll see a 1% to a 2% increase in interest rates with what's going on in the Ukraine right now. That could very well be less. It could very well be more than that. But you have at least a 1 or 2 year window before all of the interest rate increases that are about to happen actually happen, if they happen. So what that means is that you have at least 6 interest rate increases between now and when interest rates get to 3%, where you will still be saving money. And you will have saved money for all of that time leading up to them. And after that, after you get to that 3% mark, you're going to need at least several interest rate increases after that to cancel out all the time that you've been saving. So for most people, it's not going to make sense to lock in right now because you've still got 1.5% worth of bandwidth before you would be getting to a point where you would be getting to the same rate where you would be locking in today. So you might as well take advantage of that time before interest rates get to 3%. Now, some people are very much worried about interest rates going up and how that's going to affect them, their interest rate, their payments. And if that's you and you're highly concerned about this, well, then here's what I recommend. I recommend that you go through, and if you're a Mortgage 360 client, you can have us do it. Or if you are on YouTube, you can download our app and you can use the app to determine the numbers yourself. But what I suggest that you do is you calculate out what the payment would be at 3%, calculate what your payment is now, look at the difference between those two payments, and that's the premium that you would be paying for the security of a fixed rate right now. And most of you are going to find that it is a pretty big premium. I mean, it is significantly bigger than what most of us would be paying for $1 million worth of life insurance. So most people are going to look at that number and go, you know what, I'll take the 6 interest rate increases worth of bandwidth that I have, I'll stick to where I'm at, and I'll gradually let my payment increase over time. But If you are highly concerned about it, then you may want to look at locking in, and that's totally cool. It comes down to your own personal preferences and your own personal risk assessment. Most people, like I said, if they chose a variable rate mortgage in the beginning, are going to stick to that variable rate strategy. And the way we encourage people to look at this when you have an existing variable rate mortgage is to look at it through the same lens as if you were getting a brand new mortgage today. And if you were getting a brand new mortgage today, what would you be doing? Would you be choosing a variable or would you be choosing a fixed? And what I can tell you right now is that given that most clients are getting mortgages around 1.5%, that they are choosing the variable rate option over the 3% fixed rate option. Now, there is one other option that you can look at, and that's whether or not it makes sense to refinance your existing variable rate into a lower variable rate. If you previously had insurance on your mortgage, so CMHC or Canada Guarantee or Genworth, now known as Sagan, on your mortgage, you can get a 3-year variable rate for 0.99%. So you can actually take your mortgage and improve upon it and get an even lower rate. And for those of you who didn't have mortgage insurance, there are options out there right now, seemingly, that could get you an even bigger variable rate discount and subsequently a lower rate. So it's something to look at. And when I release the video for the mortgage interest rate update for March of 2022 later today, you can go ahead and take a look at that. And if it seems like there would be a rate that's lower than what you're paying, it may be a good time to take a look at refinancing and getting an even lower variable rate to make up for some of the interest rate increases that are coming in the next little while. So there's no reason to panic about this. The best thing you can do is stay away from the news, stay away from the media, and just stay the course with respect to your rates. By the way, like we promised you in the beginning, if you are a Mortgage 360 client, we will advise you at any time that we think that it is the right time to lock in or there's an advantage to locking in. And you will definitely hear from us pretty much every time there's going to be a rate increase over the next few months, so we can go over in detail whether or not it makes sense at that point in time to lock in. And again, if you're one of our clients, feel free to reach out to us at any time, whether it's myself or one of my team. And if you're viewing this on YouTube, feel free to ask questions in the comment section. I can't always answer them if they're of a super personal nature, but if they're general questions, we can certainly do our best to make sure that we get as much information out there as possible. So thanks for watching this video. Again, if you have questions, you know the channels to access the answers to them. And don't forget, we've got your back 100% unequivocally.